Good day to all. I'm Shraddha here to present about the consolidation of financial and cost accounting. Now, I would like to start with a metaphorical quote, which is life is like an accounting, everything must be balanced. And now, moving on to the study, first we saw about the branches of accounting, which are financial accounting, cost accounting, and management accounting. And then we saw about the budgetary and annual reports. Now, what is financial accounting? Financial accounting is the process of recording, summarizing, and reporting the transactions and revenue expense generation in a period of time. For example, investors or sponsors need to verify an account statement before showing interest in associating with the statement with the business. And what is cost accounting? Cost accounting creates information in order to maintain track of the activities in order to maximize the revenue and effectiveness of the firm. Coming on to the marginal accounting, it is also known as the management accounting. It is a method of accounting that creates statements, reports, and documents that help in management in making better decisions related to the business performances. Managerial accounting is primarily used for internal purposes. And then moving on to the financial accounting, we saw the two systems in accounting, which is single entry and double entry systems. Single entry system maintain only credit or debit, where the double entry system maintains both credit and debit track. And we saw about the basis of accounting, three bases of accounting, which are cash, accrual, and mercantile. And then we saw about the accounting cycle, which starts from the financial transaction, then bookkeeping, then passing journal entries, then posting ledgers, preparing trial balance, and preparing final accounts, which consist of trading account, profit and loss account, and then balance sheet. And then coming to the opening entries. Then again the cycle goes on. Then we saw about the gap principles, which in short BAG, FORD, MQ, and CQ, which abbreviations like business entity, accounting period concept, going concern, full disclosure, objectivity, realization, dual aspect concept, materiality, matching, money measurements, cost concept, conservatism, and consistency. These 14 principles consist of both conservatisms and both conventions and the concepts. Then we saw the rules to verify in the past journals. We have three types of account nominal, real, and personal accounts. And we saw the rules to put which side on debit and which on the credit side. Then we saw about the financial statement analysis. We saw the many analysis which are common size, comparative, trend analysis, ratio analysis, cash flow analysis, and fund flow analysis. Common size and trend analysis are horizontal analysis, whereas comparative is a vertical analysis. Trend analysis consists of multiple years of the analysis. Then we saw about the cash flow analysis, which shows the inflow and outflow of the cashes in a company. And then we saw about the fund flow analysis, which shows the investments and the operational expenses. Then we saw about the cost accounting, which in which we saw about the cost sheet, we saw about the primary cost, working cost, and factory overheads and all other overheads. Then we saw about the tender quotation, which used cost sheet, and then we saw about the major cost components, batch costing, and process costing. Then we saw about the budgetary control. Budget is nothing but it is a quantitative plan for acquiring and using resources over a specified period. And we saw about the classification of budget, in which it is classified into three types, which are based on time, based on function, and according to the flexibility. According to the time, we saw the long term, the short term, and the current, where the long term is based on the years, 3 to 5 years. In the short term, we have months or the weeks, and current is for the current period. And according to the function, we saw master budget, cash budget, production budget, and etc. And then according to the flexibility, we have two types, which are fixed and flexible budget. Then we saw about the annual reports and the statutory requirements. In that, we saw about the audit of companies, where we saw about the environmental audit, the steps in environmental audit, the benefits, and what is environmental audit, and in which way it is useful. And we saw about the audit under the computerized environment. Computerized is everywhere, all over the world, in every field, and it is also has an impact on the accounts, which is used in auditing. We also saw the steps in the computerized environment. What are the audit steps involved in it? And then we saw about the International Financial Reporting Standards, which is known as IFRS. We saw introduction about it, needs and similarities of Indian GAAP principles and IFRS. It is used for the investors to know about the opportunities and risk involved while investing in a business. And then at last, I would like to conclude with the few tips to get more marks or to score more or to master in accounting. The few steps are reviewing the basics. Reviewing the basics is the first step, and practicing the problems, work with the real world examples, seek additional resources and learn, collaborate with your friends and discuss, teach others. When you teach others, you will also get to learn more, and continuous learning. Of course, continuous learning makes a man perfect. And I would like to conclude with that. Thank you.